Hey everybody, and welcome back to the Crypto Night Show. Your host Superman in the house for another day on crypto. Boy, oh boy, we have got the bear market still in play. I don't know about this crypto spring, but we are back into definitely the crypto winter still here. May not be too far away though for the spring. I'm still picking mid-July for a bit of a pickup, so we keep looking lookout for that. But at the moment, still a bit of carnage on the street. Keep retesting to find the bottom there of the move. So we shall see. Obviously, the 4-year cycle bros have got the October on the mind, although everyone's going to front run at September. That's kind of the bearish scenario. The rest of the market still holding on to the fact that we might be at the bottom range right now. And of course, the power law is kind of the one that's holding that up at the moment, as well as the cost of Bitcoin miners. So we'll see where it all lands. We've certainly got some bullish news ahead. Potentially, we're already seeing some of that already. I talked about that yesterday with the oil prices coming down and the manufacturing index numbers. And of course, we had inflation in overnight, and we got an unusual response from the market, in my view. But hey, that's using everything they can, the old bears, to take the price down, aren't they? They're using everything they can, even if really it made not a lot of sense. So we're going to get into all that during the live stream. Before we do that, don't forget to subscribe on the way in if you're on YouTube, and if you're on X Live, don't forget to smash the follow, and importantly, hit the repost button there. I don't know what happened there. Hit the repost button, and let's go for gold. Let me just push this into the pinned. I'll pin that the show to the top of the XXXX. We're getting some sort of delay going on. But we'll get in the mix there. I think I'm trying to speak too fast here at the moment. I just can't slow down. It's just so crazy. All right, so let's get into it. Let's slow things down and move into the stock market results. Let's do that. Get in the chat there as well if you can, and say hello and all the good stuff. We got the US stock futures are steady. Yesterday, remember, the futures was green, it was on the upside, and we ended up having pretty mixed results on the stock market, if not down. So the futures there doesn't always mean that it's going to be a green day. And we can see the Nasdaq there down for the Thursday results on the stock market, down almost 0.5%, 118 points to 25,358 on the Nasdaq with all the tech companies. S&P was pretty much flat at 7,357. Dow Jones was the only one to manage to be slightly up, 0.14%, 71 points to 51,920 there. That's an old Dow Jones. In fact, let's have a look on the last 6 months. You can see Dow Jones pretty much just off the highs there as well, so not too bad. US dollar is increasingly strong. Well, we've got the US dollar at 101.31. That's been strengthening, and we got Scott Bessent out there, right, talking about strengthening the US dollar. Obviously, they've got Venezuela on, selling their oil US dollars, so more demand for US dollars. They've probably got Iran there, I think, also indicating that they'll be using US dollars as well. So, you've got a lot of this geopolitics going on, but you've got the White House trying to strengthen the US dollar with for more longer term with all the big oil countries, right? So some pretty interesting stuff happening here. In addition to that, of course, we've got the Genius Act from last year. That also strengthens the US dollar, right, with demand for stable coins backed by US treasuries. So you've got a lot of stuff happening around strengthening the US economy. Meanwhile, you've still got the old foes out there, China and Russia, and a few of their pals trying to undermine the US dollar. But it looks like they're losing the battle under Trump leadership at the moment. And it's certainly looking good. But, it is what it is. Let's go to commodities. We've got commodities at the moment. West Texas is down 60 cents. Brent oil is down 8 cents. So we're at $71.35 and $74.90. West Texas was lower yesterday, if you remember. So it's still got the weekly there. We were a bit lower, down at 69. Just climbed a little bit, but down at the moment. So that is the oil. So it's generally coming down, though, right? Generally coming down. Let's look at the last year. We can see that we're pretty much at what we were a year ago on the 30th of July, which has peaked up there. So we're getting down there. We're still a bit of a premium left. Probably around about probably only like $5 to $10 left in the premium on the low end there. $15 tops at the bottom. But, you're probably talking about a $5 range. We're not far away from getting a lot of that risk premium from the war out, which is very bullish for Ethereum. We know it's strongly inversely related, so that's a really cool. So even though we've got carnage still in the market, we're actually getting some of the mega themes supportive of a rally later on. So we got gold at the moment, just down $15 to $4,032. Obviously, gold also has rotated down. We can clearly see that in the chart. It's very much at the crossroads right now at 4,000. I mean, this is a big deal for gold. And if it breaks that, then we're probably got 30, I don't know, maybe 3,700 on the next level. Silver there is at $57, down 2%. That's obviously rolled over as well. And we've got some support at $53. 53, let's say, dollars on there. We'll see how that goes. 51 to 53, let's say, in the support. We're currently at what did we say? Silver 57. Copper's going to probably do quite well. It's rolling over a little bit at the moment at $6, but still expecting copper to do very well this year. Maybe could be the best. Who knows? We'll see. Certainly a lot of demand. All right, let's jump into the rest of it. We did have the PCE data come out. Obviously, overnight we had Micron rallying, so the AI there helped a little bit with some of the companies. But we had the big inflation data out, right? That's what we're looking at. So the PCE data, it came in at 4.1%. The forecast of 4.1%. So why Bitcoin, do a bit of a flash crash again? Why find a new low? I mean, I just don't get that one. I'll have to probably do some further investigation, but actual forecast is the same. It was higher than last month, but we expected that, right? That was the forecast. So a bit weird. While the reading was largely in line with expectation, it still showed inflation remaining largely sticky, and I guess that is the end of the day pill, right? That was the pill at the end of the day. With core PCE remaining well above the Fed's 2% there. Markets largely maintain bets that the Fed may raise interest rates at least once by the end of 26, and I think that's fair call at the moment. But however, I think that the new chair wash is going to reset the whole data set. That's why where I think he's heading with his reviews. He's got 5 different panel reviews, and one of them is on the data. So, and I just don't think he's a big fan of CPI in PC indicators, which is fair enough. So we'll be watching that. Resilience in the US economy could give the Fed more headroom to hike. Obviously, GDP data for the first quarter was revised slightly higher, and I am expecting us to get good GDP. Secretary Scott Bessent also talking about 3%, right, by the end to pick up there as well, 3%. Those big threes. We're going to have to do a show all on that. I think we're going to have to do a show just on the economics. All right, so that is it's where we are on the old markets. Let's jump over to the next bigger economic news. Obviously, it's impacting the markets now as well, particularly when Bitcoin and crypto is pretty vulnerable right now. So we're going to go to the economic calendar and have a look at what else is coming up in store, obviously with the inflation out. So this week we had obviously CPI come in. Initial jobless claims were a bit lower as well. Next week, let's have a look at actually tomorrow. Tomorrow, nothing tomorrow, but next week. Let's see what's coming in. I think we've got the manufacturing data coming in next week, if I remember rightly. So let's look here. So Wednesday, we're going to have the JOLTS report opening. That's going to be pretty important. We got the Chicago PMI, but really the big stuff there on the Thursday, the ISM manufacturing and the S&P Global Manufacturing Index is coming in. Obviously, this over 50 is growing, and we've had that for about 4 months now after 2 years of being contractionary. So we are getting the manufacturing expansion in the US and higher GDP, and employment's still been pretty robust. So remember, one of the two goals of the Fed is employment. The other one is inflation. Inflation, of course, is still a bit elevated, but we have had the Iranian conflict play out, and that's about 2.5 months so far. But oil prices have come down. So I just think that's like a 2.5 month wave that's going through the inflation, if that makes sense. And we'll see how that plays out. I don't think the US has benefited from supply as the rest of the world may have any supply issues itself. So I think actually that's why I think it's going to wash through fairly well. And I guess by the end of the third quarter, therefore by the fourth quarter, especially if we get some data changes from Wash, we could see actually maybe interest rates aren't raised and we get either flat or even a reduction. We shall see. And then we got non-farm payrolls on Friday and unemployment rates. So there's your employment data there. All right, and we got Independence Day coming up. So maybe we'll have some aliens land. as well. You just never know. That's a bonus round. Let's get into crypto. Crypto not having a lot of fun lately. Let's have a look at that. So we're down another 2.2% again today, 2.13 trillion on CoinGecko. We've got Bitcoin at the moment is down 2.5%, $59,318 right now, so below 60K. Pretty psychological level there. We're down 5.7% for the week. Ethereum is down 3.8% at $1,559, down 8.8% again. So we're back down to the $1,500 mark again. I remember last time we got to a low of 505, 1,505. We'll check that out. We got BNB down 1.3%, $557, down 3.5%. Number 6 is XRP, down 4% or 10% for the week, $1.03. So real discount there. And Solana down 0.7%, 3.4% for the week, 67 cents. Tron down 1.3% at 32.2%, but is still up 0.7% for the week. And Hyperliquid there, number 10, is down 0.3% today. Still holding at $63, which is not too bad. It has pulled back with a couple of the other sector leaders at the moment, but it's down 7.7% for the week so far in Hyperliquid. Even Hyperliquid getting hit there. All right, so let's have a look at the top 100 and the best 5. We've got Adira still the best there, 27.9%. Baldex there, a move higher there at 11.3%. We haven't really, can't remember if we've seen that there before. We've got Lab up 9.9%, Stable up 5%, and Venus token, remember it had the big whale flash crash that, sell that off 4.4%. In fact, we've seen another one today, haven't we? We've seen another one, I think it was Labs that got smashed today. So these big wallets that hold these tokens, you think that it's one of the best performers, and then suddenly one of the whales, maybe a founder or something, comes and smashes the chart while the market's going down, just so they can capture value. And so we've had 2 big ones. Venus was one of them, and the other one I think was Lab, which Lab was really leading. Remember, we were reporting on that, but they also had it yesterday, pretty dramatic as well. So this is crypto. Some of these projects are supposed to be diamond hand projects, and bam, somebody a whale managed to be able to just smash it. Probably inside a team player as well. But there we go. We got Venus. Let's have a look at the top 5 over the top top week, I should say. Top 5. Let's do that. Dixie, 49%. We got as number 1. We got Adira there, 28.9%. ADI up 14%. Jupiter up 12.5%, and Baldex there up 12%. So Baldex making a bit of a move. Now we're going to do the opposite, of course. We're going to have a look for the worst, because I'm trying to find. Let's see if we can find it over the last week. I'm sure it was Lab that was the one that got hit hard. I can't see it here straight off the bat. Has it gone out of the top 100? Maybe it's possible. After that flash crash, there it is there. I'm pretty sure this is the one. I don't know if the chart's going to render, because I've had trouble with it rendering on here. Yeah. So anyway, checked it out. I have a feeling it was Lab. Pretty sure. Could be wrong there. All right, let's jump into it. Let's go into Bitcoin. It's a real pain. That thing doesn't render on the CoinGecko there. $59,300 is where we are right now. So look at these waves. So this is the weekly chart. Excuse me. The weekly chart here. We've up at the price of the chart there. Obviously, we're up $126,300 at the top there in October last year. We've come down in these waves, sort of 1 wave, 2 waves, 3 waves. I don't know if we want to include the little ones, but we've got these little waves. Anyway, we'll do the big waves. 1 wave, 2 waves, and then 3 waves down pretty much. So 3 big ones with a couple of little ones there. So yeah, where is the bottom? Well, the power law's suggesting we're around the bottom right now. However, the 4-year bears are still picking October, and they're still targeting even lower prices, based on the cost as well of Bitcoin miners. So they've still got it dust down, maybe 47 to 53, depending on who you're going to ask. But down there, definitely, I think we're going to make one more wave down. So let's see how we go. However, we've got some good stuff happening. Now, I've got the weekly simple moving average. This is kind of typically this is approximated pretty well with the 4-year cycle, or at least with the bottom of the chart. So they're not normally quite complementary to each other. And we can see that the 200-week average is at 62,440. So I've switched this away from the exponential moving average, which sort of weights more contemporary prices than the averages. and I've got the more simple moving average. So this is kind of where the market, benchmarks itself. So we're at 62,440. So typically below this has been a pretty good time to acquire, as you can see in the chart here on the weekly charts, and we've been right in the top. So here we are, we're below that right now, and 62,440 is the 200 moving average there, simple moving average. So we're in the kind of the bottom zone, one would argue, where we are. We also had a lot of support, I guess, in this area back in August 24 there. Now, moving forward, we've got obviously the we've obviously got the Clarity Act moving through. Now, this looks like the Clarity Act will move, is going to process through July. Obviously, it's integrating a lot of different versions from the committees, Senate committees, and that's going to go through July. We're hoping that will get to vote before recess in the Senate, and that's by the end of the first week of August. So August, not 4th of July, but August. 4th of July was kind of the White House advisors that would get to the Senate floor. And so it's still going to process through July, but we're hoping to get to a final vote there by the first week of August. So that's pretty key. And that would certainly, if it's negative, that's certainly going to play into the bear's 4-year cycle and move us down, right? Move us down if it's a negative, I think. But if it's a positive, then it's obviously going to help us go to the upside, and keep the prices higher. It's kind of the play. What else can we say about that? So we've got that going forward. Also in July, we've got the Genius Act regulations are supposed to be coming out further in July, if I remember rightly, from the SEC. So that's also a bullish event. Now, that's kind of an already known, but the fact that they actually get published earlier is better. Remember, the Genius Act is fully enabled by January 2027. So that's getting closer as well, right? That's only like 7 months away. So those are all moving forward on the regulatory front. Obviously, also in July, we have on the stock market front again, we have the SpaceX getting into the Russell. That's tomorrow, right? So tomorrow, the Russell what do they call it? Reinstatement. I forgot the name now. They're recalibrating it basically, and so that's going to have SpaceX go into Russell, and also on the 7th of July, we've got SpaceX going into the Nasdaq, right? So that's going to get potentially $300 to $400 billion is the estimate that's going to flow into there from passive investment funds, and then obviously active funds on top of that. So we've got a lot of capital still allocating to AI. It definitely seems to be sucking a lot of the capital out of the room into the AI theme. We're kind of waiting a little bit for that to rotate back into crypto. So we've got all that happening. The positive of that, of course, is that Bitmine immersion is also going into the Russell on Friday. Likely to be in the Russell 1000. So that's going to be potentially really bullish. And we typically, on average, about 25% of a company is eventually held by the passive and active funds in the Russell 1000. So Bitmine, even though it's under pressure at the moment, like Michael Saylor's strategy, that should get a decent uplift from that with capital flowing in, because it has to flow in if it's in the index, right? So we're watching that. All right, so we've got a couple of regulatory potentially could be great things for crypto. Obviously it's a binary thing. If it's negative, then it's probably going to be negative for it. We've obviously still got a lot of capital flowing into SpaceX and potentially other IPOs. The timing of those are going to be important as well. And that's where we are those are some of the events coming up. Some of the positives that we've already had is the oil price coming down. And it's almost lost the risk premium. And of course, also the manufacturing index, which we're going to look for next week to give us even more confirmation of expansion in the US economy, and GDP has been slightly positive as well. And so everything's going well there. So we haven't got the economy tanking, which would be the worst thing ever. It's actually expanding, right? So that's kind of cool. All right, so that is where we are, and I'm talking about the US economy, right, in particular. So that's kind of where we are leading there at the moment on Bitcoin. Now, obviously, the Bitcoin price has been falling, and the digital asset treasuries are falling with them, but they're falling much greater. So we're going to look at that. So strategy there, Michael Saylor, 847,363 Bitcoin. It is obviously the number one digital asset treasury. The other big one is Strive, which is number 7 now. They almost got 20,000 Bitcoin. And we know that there's several others of these are going to be entering the space, like a Bitcoin Standard Treasury Company. They've got a vote on Friday. That's this Friday. So tomorrow, and they'll be voting on that, and that's got another $1.5 billion ready to buy Bitcoin. You couldn't ask for it at a better time, could you? Getting Bitcoin at the current price, which will make them the lowest cost digital asset treasury as far as I'm aware. And so that could be huge for them. They've already got obviously 30,000 in there, 25,000 there. We talked about this yesterday. So we've 30,000. They got enough money to buy maybe another 25. But given that Bitcoin's fallen, maybe up to 25,000 Bitcoin now. That would move them to 55, which would make them number 2 digital asset treasury. And we know that Metaplanet is, I think, is going into the digital credit market or digital asset market as well. So we've got lots of players, and obviously others are on the move, including the Trump family there with all their miners and stuff. So that is where we are. Let's have a look at the digital asset treasuries. The digital credit, I should say. And they're under a lot of pressure. Now they have been below par at least 3 or 4 times before, and also up to about 3 weeks. But this time it's even longer and deeper, right? So this time now, Stretch, which is Michael Saylor's strategy, preferred stock. This is the targeting the debt markets. This is a relatively new product because essentially up to a year it's been around. It performed like incredible between February and April this year, raising billions of dollars and buying tens of thousands of Bitcoin every month. It is under pressure now though, and of course the negativity with the markets going down in Bitcoin. This is going down real fast, and of course Michael Saylor's getting all the flack. He's the bad guy now, and of course maybe they made a few little missteps, as people like to say, but it is down pretty dramatically. Now the whole idea is this should self-regulate, right? Should self-regulate. So there's a couple arguments around that, and also SATA there is down as well. So SATA, the new golden child, it also, remember, it bought 750 Bitcoin last week. It is under pressure now also, and is well below $100 as well. But look at the nominal rates. The nominal rates for Stretch for the dividend is 11.5, and SATA is 13%. Unbelievable percentages. Remember the debt market, which they're targeting. Let's say it's 300 trillion. They only offer 2 to 4% for the yield, but you're getting 11.5 and 13% here. Not only that, but Stretch has moved to bi-monthly payments. That's 2 weeks, and SATA has moved to virtually daily payments, right? Essentially all days except weekends and the holidays, but actually delivered every day. About 4.9 cents, I think it is, per share. So that is a game changer. We know that retail has been dominating the acquisitions of these, something like 80-90%. And institutions are probably looking at the product, but probably at the moment they'll be going, we've got to wait to see how this flattens out, and will it self-regulate? And what is the self-regulation? Well, one of the key pins is that the effective yield, because the price is below $100, the nominal dividend yield is 11.5%, but the effective yield is at 15.29%, meaning that maybe at the next issuance period, particularly for Stretch, which will be after the 30th, when it goes ex-dividend, this should be 15.3% right now, right? And therefore, you'll be able to close that gap, $100 gap. That's kind of the argument there. And so I don't suspect that we're going to get anything like that, and we're going to talk about that in a minute. But SATA at the moment is also indicating a 15.68% yield, which is pretty crazy, right? Remember, SATA is more regular, more frequent, and both these products are innovative, but it has got high amplitude, right? In other words, the preferred stock is a big percentage of the balance sheet there, so that's high amplification, and of course they've got to be able to pay for that. Now, SATA has managed it quite a bit better than Stretch, and SATA is run by some pretty much world-class asset guys that are used to running managed funds, money market products, and so I'm not surprised that they are doing better, in my view, than Michael Saylor, who's obviously very clever, they've been playing around a lot with these products, these preferred stock products, but the SATA guys, they've got at least, I think it's 18 months or 2 years worth of dividends coverage, where Stretch, they had that too, remember, but then they paid down their convertible debt because they were getting a discount. So long term, it was a great idea because you're getting a 10-cent discount on the dollar. But in the short term, that meant that their cover went from 18 months down to, I can't remember what it was, 6 months or 3 months, 6 months maybe. We're really quite short. Now, what have we seen in the last week or so? We've seen them try to fix up the short game because they played the long game well, but the short game was carnage. and after they also sold the 32 Bitcoin to show that to credit so-called creditors that they can sell Bitcoin and the market's all fine, that they ended up not having enough dividend coverage, and so we've seen them raise money, arguably dilutively, to build up their dividend coverage, which I think is now at 9 months. So to shore up that confidence, right? So there's a confidence issue, but you've got a couple of issues together. You've got Bitcoin, diving, retesting the bottoms, trying to find the bottom there. You've got the lack of interest coverage being concerned. You've got the retail market dominating the buyers, which are much more fickle than institutions. And I'm not talking about the manipulative institutions. I'm talking about the more diamond long hair hands ones that just sell down in markets like we see with the rest of crypto, right? Everyone's ready to jump on each other, dump as fast as they can, right? And we see that time and time again in the crypto. So we got all those forces acting against them, and now also negative sentiment, and everyone wants the bad boys. So Michael Saylor's the guy, right? So there we go. Now, I'm not saying he's done everything right, but it's certainly the market forces are there. Now, I think that everything's going to be fine. The shit will right itself. We'll find the bottom of Bitcoin. There's all leverage play, and everything will reverse back the other way, right? That's kind of where I feel it will go, and that the gap will eventually close. It will self-regulate and close. Now, where they're going to go with the yield, I don't think they're going to go that high. So let's have a look at a little article that was put in on Treasuries here, and we're just going to scroll down to some of this, and let's get in here for the moment. I'm going to scroll down here, and we're going to look at the volume weighted. So the volume weighted average price. So we obviously they've got a management team can regulate the price depending on the volume weighted average price for the month. And so what we suggest is that for every $5, if it's less than $95, they will do a 50 basis point or more rate increase. So what are we going to see them do for the next month? Obviously, we're going ex-dividend on the 30th, so we've only got about 2 days left for this month for that gap to close, which is very unlikely based on what we saw last month. So what are they going to do? Are they going to go to 12% or are they going to go more? The gap now is 15.3. So I guess we'll have to just wait and see what happens close to the end of this month to see what this rate will be. If they're going to try and close the yield gap, right? And that is interesting. Now, that should arguably make the price go close to $100, but we know there's still a lot of those fear factors that I just mentioned earlier. So we'll have to see how close this gets. But if you're not going over $100, you can't raise more debt, right? You can't issue more shares and raise more debt and buy more Bitcoin. So we're in a kind of a negative cycle. Now, I don't think it's going to be a death cycle in any manner of to speak, because it's a relatively new product. We are finding the bear market bottom, and as soon as Bitcoin starts going back up, the market starts flooding back in. We all know how it works. So that's kind of where I feel we're at right now. Now, it would be beautiful if we were at $100 and we were raising debt and buying Bitcoin, because if we can raise $2 billion of debt money like we did in February to April, buying tens of thousands of Bitcoin right now was a dream come true, right? Dream come true. So we'll see. We'll hope for the best for that. It is bullish for everybody, not just Bitcoiners, but everybody in crypto. We're going to keep a lookout for that. In any case, the innovation is there, and we'll watch the markets to self-regulate. Maybe it will happen over the next 3 weeks, let's say, because obviously we've got ex-dividend on the end of the month, and then ex-dividend on the 15th again, because now it's moved to 2-week cycle for stretch, and SATA is going to be offering its first daily paydays, right? It's going to be very exciting to see that play. So very calm. All right, so that's some of the comments there I wanted to talk about with the old Michael Saylor. Now, obviously, we're following this power law. Seems to be the best model holding up, right? Now, obviously, the 4-year cycle bears would break this model down. This model is, slightly dynamic in the sense of new data, but we've probably got a disconnect between the bears 4-year price targets, especially some people, thinking, we're going to go back to 30 to 40K, some people 40 to 50, and some people pretty close, like we're in that range, 53 or something from here. But let's zoom in on the power law. Seem to be holding up pretty well, and you can see us testing it right now. We have just been testing this twice at least, if not 3 times on this chart here. Now we're going to go to the current day, which is 26. So let's go to the current day, 26th of June. We got the 25th there. So 25th is We got the power floor at 59,652. Obviously, we went lower than that on the Bitcoin chart. We're going to show that in a minute. We went down about $1,000 lower. We really have tested this Bitcoin long-term power law. It has been pretty reliable. And we've got the mid price there, the $168 as a return to fair value, right? That would be the fair value of the power law modeled here at the top of the line for 590K. So if we can kind of hold this general zone, very bullish. And then we're, got the end of the year target at $200,000 Bitcoin. Like just as we go down violently, like we have seen with the market manipulators and everything else that's going on, the bad news and market manipulators joining together there. You've also got the opposite happening, right, where we go up to the upside. So just bide your time. Just bide your time. Have a cup of margaritas, and blink a couple of months later, and before you know it, it's back in the glory days, right? That's kind of the play. Now, I am still waiting for the banana part of the curve moving ahead, and I do believe that the next 2 years, particularly 6 to 24 months, is going to be so appreciative in the market. It's going to be truly glorious. So this is kind of the doom time, and we'll get into the glory time very, very soon over the next 2 years, because I think we're going to have quite the re-rate. Now, that said, we're probably going to have a pullback in the stock market on the way, and then another glorious ride. That's kind of how we might see it playing out for the rest of the year. And that pullback stock market could lead to rotation if it's at the right time into crypto here as well. All right, so let's jump over to Ethereum. Ethereum obviously having a hard time, but look at last year. Last year we got down to $1,400. 1,383 to be exact. And that was in April last year. And here we are in June 22nd, and we are down at, we've been down to 1530, but we were even lower in June. Early in June, as the weekly charts, we were down at $1,505. So pretty bad. Now we thought, this price on the 5th of February earlier this year at 1742 was bad. Well, we already come back down, a meeting back we were in April. And then last year, of course, we had the big rally of 256% in Ethereum. So this is what I'm saying, is that as violently as we go down, violently we go back up, and we've seen that time and time in the Ethereum chart. You can see that here time and time again. But I do believe the next re-rate that we get is going to be truly break the 5-year accumulation, and we're going to break out from 5K. And so this is kind of where we are. What are the moves here? Well, obviously we had the tariff relief there from Trump. So obviously you had all the Trump issues here with the tariffs, and obviously reordering the world trade markets. And then, of course, the relief there, as well as short cover and the digital asset treasuries coming in. We had a big hyper rally up 256%, and that's $3,500. So pretty bad. We were down at 13. Just think about this. We're down at 1383. Now we have a $3,553 rally, and that's in 133 days. So just think about how, even though you get the violence on the way down, you can have the violence on the way back up, right? And things can turn around pretty quickly. So just be patient. Don't trade a trader's view. Always take an investor's view. It's better. Unless you're doing perpetuals, then you can take the trader's view. And I wish you the best luck. But if you're investing, then that's the view you should have. Now, obviously, we're back down there again, testing. And I think we're going to get something similar again moving forward too. And we might be as optimistic as mid-July once we get a lot of the SpaceX stuff out of the way. Now, I do think there's an uncertainty around the IPOs from Anthropic, Google, and OpenAI. So just the timing of those will be important. So that could give us some volatility as well. They are still pretty big capital requirements. I think like $60 to $70 billion, something like $65 billion, let's say. So still quite a few of those out there, and they could still cause a bit of hiccup there. So that is where we are right now on the old Ethereum at 1526. And remember, all the digital asset treasuries are leverage plays. They're going to be up better and down worse, right? That's generally what you should expect, and that's what we're seeing in the markets. So are we at the bottom though? That's the question. We've got to be pretty close, unless you're in the 4-year cycle, guys, and you think we've still got a couple more months to go. Maybe September is the pickup time, right? So I'm still feeling a bit more bullish around mid-July. But that said, and that's the reason why, is because the oil price is coming down, and the manufacturing index expanding, the GDP looking really good, a lot of tax refunds, all that sort of stuff playing out. So I think we're still looking very good there, and the geopolitics is calming down. We've got the midterms coming up, all that sort of stuff. And if we get positive news from all the regulatory stuff, that's all bullish. Now, if that's negative, then it's obviously going to play into the 4-year and possibly push out the rally more into September, right? So just take note of that. So there's a lot of I've still got qualifications because we don't all know the future exactly, right? But those are some of the key lines there. That is on the weekly, and you can see we're at $1,524. What a beautiful time to pick up Ethereum right now, in my view. And of course, even if it's the bottom's not until September, you've got a good DCA rank. Anytime that you've been below the 15 moving average here on Ethereum, it has been a great time to buy, and you've pretty much got guaranteed money from the market point of view. Guaranteed is a very tricky word, but you pretty much got the upward. You got the upwards free money printer after that, right? So anytime you've been down here, it's been pretty glorious. Below the 50 month moving average, I should say, and it's been good times all the way back to 5K. So all you have to do is be a bit patient there. Now, obviously, we talked about the catalyst there. What are the catalysts now then? In addition to everything I've said before, the catalyst is that we've got a stablecoin boom, and that's going to accelerate. We've got potentially regulations coming around the stablecoins in July, and of course the full enactment by January next year for the stablecoin. And we're already seeing a boom in stablecoins that's continuing to grow. Secondly, the tokenization is in takeoff phase right now. We're at 33 billion in active trading going on, and that we're expecting that to by the time we get to October, we've got the DTCC coming in fully. They're running all the TradeFi pipes, 114 trillion under management. We're expecting that to really take off. So we're really ramping up here. So this is the catalyst. And then thirdly, we've got the AI payment boom. And that's, I think, only even earlier. That's in the seed phase, so not even in takeoff phase. And that is starting to take off. We're seeing Coinbase already, participate in there. I think we're going to see a really big rally with these AI payment and agent systems. Because there's going to be, the real users are going to get swamped by the number of wallets and users that are digital, right? That are AI, artificial intelligence kind of activities that are going on, AI agents. So we're going to see that really boom and to create a lot of commerce and transactional value, right? So that's a really big deal there. So very, very exciting. And amongst all of this, of course, we've got Glamstone coming up as well, going to improve the blockchain. And now we also have a commercial foundation also being set up by Tom Lee and the Digital Asset Treasuries and SBET, and they're going to commercialize the blockchain. Now, what's Tom Lee trying to do? Well, Tom Lee is trying to bring finance and mass adoption to Ethereum, and that's all ahead of us. So this is all the catalyst for us, not only going back to 5K, but also going past 5K for the first time after these 5 years accumulation and up and to the right. So we've got obviously the blockchain development is going to be towards commercialization now, and not all the other fluff that we had before, which was actually undermining the value. And if you guys recall, Richard Hart was highly critical of that, and particularly of the second layer attempts, and of course devaluing the underlying chain. All that's going to disappear, and we're going to get into the value on the Ethereum there, and obviously other chains will benefit like Solana and others as well. But that's kind of the play. So that's where we are right now. Let's jump into Bitmine immersion. Now, Bitmine immersion, like Michael Saylor's strategy, is highly discounted right now. We've got the MNAV, the market net asset value. This is value of the Ethereum assets there, essentially, and that is sitting at 0.85. So it's very low. And of course, typically you want that at 1-to-1, right? Where the market value is the same as the asset value that you're holding in terms of Ethereum. And so this is well below that. It's dramatically below. We've seen it low at 91. Now it's at 85. So really, this is really bottom sort of stuff. They can't raise at the market common stock raises. In other words, issue more common stock over one because it's miles away. So they're going to wait for that too. The good news about Bitmine immersion, they're essentially there anyway, guys. They have got the money to pretty much buy all the Ethereum, and we're seeing them buy more Ethereum, right? So Bitmine will get to their 5%, and they've got probably enough cash, especially with Ethereum dropping down where it is now, to get there. Like if they wanted to, probably today. They had about $660 million left. They'd done a few slightly dilutive raises, possibly. Now they can do intraday raises with the MNAV, which is a little cheeky, but that's possible too. And of course, they did issue that preferred stock, not the same features as the preferred stock by the digital asset treasury from Strategy and Strive, but they offered a yield 9.5%. The difference is that they have 2.8% staking yield, right? So they can pay just a fraction of that to cover their preferred stock, raise that capital, and buy the Ethereum and get themselves to their 5%. So they're essentially there, especially with the price of Ethereum now. They would be at the 6 million ETH, 6,034,000 ETH. So we may get some pretty cool updates next week on Wednesday about their continued purchase. I think they bought another 50 this week, I think, that I know of. I think that's the case. So, but if they want to, they get there straight away. That said, they are also, now supporting the the new ETH Foundation there. I think it was Org ETH it's called, and they are going to support that with SBET, the other second biggest digital asset treasury in Ethereum, and help commercialize the blockchain, get it ready for institution and mass adoption, right? And trying to get more burning too of ETH, particularly through bridging and other technologies on the Ethereum. So we're going to be watching that too. So that's kind of all bullish. So yeah, we're just in that. I think we're in that time where we got all the negative news, but the value on chain and the future value is going to be enormous, right? So it's all in play. Like I say, we've got stable coins well on the road. We've got tokenization at takeoff phase, and within a year, because of the big players like DTCC coming, rolling out fully by October, we're going to see a re-rate to $1 trillion plus market, right, very quickly. And so I think we're looking very good. And then we've got the AI, which is at seed level at this stage, but I think that's going to absolutely accelerate away, boom, over the next 9 to 12 months as well. And then on top of that, you've got Tom Lee leading the way with finance and mass adoption. Mr. Beast Industries is a big, big deal there. And we're going to be watching out for the applications that they launch, particularly with their Leap app and everything else. So keep a lookout for that. I think it's just that ironic time where people go, oh man, I wish I had bought there, but it was so negative. It was so bad. And I didn't want to buy, didn't want to risk. And then, 12 months later, it's just like, oh my God, it's the most valuable new payment rail system in the world. And finance did come. And we're seeing that evidence for it, right? So we're not just saying that it's going to happen, that finance is coming and mass adoption. We're actually looking at the evidence for that and substantiating those claims, right? And so that's kind of where we are. That's why we keep looking at the RWA value and also the news around Ondo, Xstocks, Tokenize, all the players coming in, Kraken, Coinbase, Robinhood, everybody's getting in on it, and all the traditional companies as well, like DTCC, which are bringing the heavyweight water pipes to the blockchain. So it's not we're not just dreaming here. We're talking about investment fundamentals. The TIA, of course, at the moment is really quite horrible, but we are in the hunt for that bottom. All right, so that is where we are right now. So we're going to keep a lookout for Bitmine emission, and obviously it's super cheap right now, right? So super cheap. I think it closed at $13.37. Can you believe it? $13.37. What a steal right now on the old Bitmine there. Now, you're not just buying the digital asset treasury with 2.8% yield. You're also buying the finance and the mass adoption value that's going to get added on top, which I suggest to you is going to be many X's. It's going to be quite huge. All right, so that is the play, and buy low, sell high. That's pretty much it. All right, let's get into Pulsechain. We're 43 minutes on the hour. We've got a good bunch of people watching right now. So if you haven't subscribed, subscribe on YouTube. If you haven't followed on X, smash the follow, and don't forget to repost the show on X as well. So Pulsechain, of course, is a full system state copy of Ethereum. You guys know how we roll. We're diamond hands. We're following the dream team. Now, Pulsechain's getting a chance to differentiate itself more and more as time moves forward, because not only do we have some superior tokenomics compared to Ethereum when it forked it on the 10th of May 2023, we also have a lot of value being added to the chain right now, and we're going to talk a little bit about that too. But some of the key themes that Pulsechain really will be able to thrive on is anonymity, privacy. You're going to be able to get all that on chain, whereas that's disappeared on most other chains. Also, we get the full uptime there, like Ethereum does, with the battle tested there. And though we haven't had any hard forks yet on the chain, we get to pick and choose, I guess, what's going to be rolled out on the chain relative to what Ethereum is developing in the future. And that may include quantum protection as well. So that's all the sort of stuff. We got that upside value not priced in at the moment, but I'm sure that will play out in the future along with everything else. We're also getting a lot of the top themed sort of categories that are really ramping up in value. And we've obviously seen recently prediction markets, output markets come on, as well as we're getting next month, we're going to have spot and perpetuals, with stocks and commodities and stuff coming Pulsechain too. So we're getting all the best there, and it's still very early days for all that. All right, so we've got Pulse at the moment. Let's just bring up the chart here. Let me just do that quickly. Pulsechain, and we're going to let me just bring up the Pulse chart as well. And what happened there? I'm not sure, but let's pull it up. Now we're going to pull it over, and I thought I had this ready, but maybe I didn't. Maybe I didn't. All right, so let's go to the Pulsechain chart. We're going to pick the right one there. We're going to full mode. And we can see at the moment, this is our chart here. We've got Pulse coming down, obviously, with the market, rest of the market. We're sitting at 506379. So we're going to remove the 5 zeros. We're at 6,379 on the old Pulse chart. The low was 5,400 2 weeks ago. So we're still above that by a little bit. Let's see here. We're up to about 25%. So we're still up 19% off the bottom. We're in a hunt to find the bottom, right? We're in a hunt to find the bottom on the old Pulsechain, and I think it is close. Honestly, I think it's close. And if we do get a rally either, from mid-July or even from September, October, if the 4-year bears are right there, then we're not too far away, in my view, from that. And we have, I think, been relatively insulated from recent violence, although we did get taken down a couple of weeks ago. Now, we have seen some change in the chart, and we're going to be watching that, also RSI, sorry. And so we're going to watch out for that. We do have a lot of work to break this mega downtrend over the last 3 years. We've got to get back up, in my view, up to 1,700 and bounce back on 12 or 1,000. That's losing a zero, and then up and to the right. So that's what we're hunting for, the bottom, and hunting for the breakout of the mega downtrend. So, but I think we're kind of setting up the conditions for it. We'll be watching that. Right, so let's jump into the Pulse. Pulse obviously down to 2.3%. We got Hex on Pulsechain down 4.2%. We got Proof-X at the moment. I'm running a bit fast there. Hex at the moment at 8,000 of a penny, down 4.2%. Proof-X there is at 4,037, down 3%. Pulse-X is at 505 something, down 2%. And Ink Token is at 28 cents, down 0.5%. So all modestly down today. Let's have a look at the validators. We lost a few thousand validators, haven't we? We're sitting at what? 44,700, pretty much what we've had the last 4 days or so. But we were sitting generally pretty much around 50 to 51,000 with a peak of 54,000. So we have lost quite a few recently. Let's go to the gas prices. Let's look at that. We're at 467,000 beats. Very, very low cost today. 70 pulse for a Pulsex swap. 4,000th of a penny is the equivalence. And this will go to the bridge. Bridge has been a bit of a battle too. See where we are right now. Drum roll, 48.3. So we're about 1.8 million off the bar. Actually, no, we've come down quite a bit, haven't we? We're only about maybe about 700,000 off the bottom. There. There was the bottom back here for 47.59, was it? 47.59. Yeah, so maybe about 800,000 off the bottom. Obviously, we've had Bitcoin and Ethereum pull back, and we have quite a bit of that bridged over, right? So that explains that. Now, what's the outflows? Well, we've got some, it says 760,000 here. I'm not sure what that is. That unknown Ether. I'm not sure what's going on there with that. So we'll just ignore that for the time being whenever it looks like an error. Let's jump to the Pulsechain chart, but this is where we are on the markets. So obviously, we're down near the bottom. We're fighting like the rest of the market at the moment. But we have a bigger narrative because we haven't really had a rally. We just had a down chart there, despite a couple of big rallies. We had one here, one here, or maybe 2 and 3. So maybe four rallies here, I guess, or 5, depending on how big you want to make them. So one here, one there, and one there, the 3 big ones. And we've been down ever since, even after defeating the SEC, for goodness sake. Even after defeating the SEC, we're down, we went. And, of course, last year in October, we had the markets, the majors rallying, right? So they were all getting rotation. We got rotated out into the majors while they were rallying. And then when the market came down, we went down too. So we lost on both counts. We lost when the market rallied, and we lost on the way down. So we obviously had still sacrifices selling, whale stumping, and we also had some of our major contracts taken advantage of as well. And down we've come, even though we had that nice rally after winning the SEC on the 7th of July there, 25. So it's been quite a ride. We had a couple of attempts to pump the chart. and Richard's talked about that in his Christmas videos. The market sold that down, right? That's sold that down now. It's too early in time for that. We got Frank White in the house. Bang bang Pulse gang. Good to see you, Frank White. I mean, he often he does criticize the market for the people on Pulsechain selling, but that's just not reflective of the reality of sacrifice set. Some of the contracts being taken advantage of, and not having an oracle, things like that, has been a lot of problems, right? It is what it is. So no surprise there. At the time when it was happening, when we saw that $20 million or whatever it was come in, we were just like, that's too early, and we knew it was too early. We were talking about it in Discord, going, it's just you just should just let the chart just ride itself down much earlier, and then not just clipped it. Trying to do a bit of like a hex god whale pump back in, was it March, April? I think it was April actually, 2020, and of course that was just the conditions weren't right for that. So anyway, here we are down at the moment and trying to find the bottom. So we'll see how we go. We definitely got structural change in the chart, which gives us some confidence that we're on the way up. We've also got a lot of value being rolled out on the chain as well. So the upside value seems to be a net positive, and the charts seem to be moving in a bit more favorable direction for finding the bottom and breaking that mega downtrend. That is the thesis, and we're going to be following that in the weeks ahead. All right, so let's have a look at what's happening today. Well, obviously we've been watching volume as well. Volume's still been pretty low, right? We had, 3 weeks ago we had really good volume. We got up to 6 to 10 million, which basically is 3-4 times the amount of fees being earned by the DEXs, the DEX aggregators, and of course the LP providers. So that's always good incentive, right? More incentives, the more liquid TVL and liquidity and volume that we can potentially get, or self-feeding. And on top of that, we've had more projects, more top tier projects launching, and we're expecting to have a really good next 2 months with projects launching as well. The forward look is as good as the past, and maybe even slightly better, right? So that's exciting. But the volumes are not there yet. So 2.5 million. Let's have a look at where that's distributed amongst the DEXs. We got 1.8 million in Pulsex. So we had 2.5. So we're after 700k. Liberty Swap is about 300, so we got looking about 400. 9mm is close to 300, so I guess we're looking about 120 or something. We got 110 there, so presumably we've got a little bit with Uniswap 10 and 9-inch, which is almost deprecated, got 6.5, so that works out pretty well. But nice to see Switch X over 100k, by the way. It's good to see that. And most of the volume, where's it coming from? Well, most of the volume on Switch X, which is a V4 DEX. These are all recently launched. So Liberty Swap Switch X recently launched in the last month or two, and we've got most of the volume there on Rat Pulse and Rat Pulse and Rat D from Ethereum, making most of the volume there, with a little bit from Switch and Hex. 9mm, most of the volume is coming from Richard Cause and Rat Bitcoin, funnily enough, from Ethereum. So they're kind of the major ones there. And then moving to Liberty Swap, or Liberty Pools as we call it. The volume there, most of the volume there coming from Peacock, 110k almost. The OG WebChef printer, Peacock Ninjas, doing 81k, and then we got the Pulsechain itself doing 50k, and then a couple of smaller peers there with I guess that's a die there as well. So just a little bit there. So that's kind of most of the volume. And then Pulsex, which is the number one DEX from Richard Hart. The volume there is got Source Mini Meal, the specialty food producer there in Europe, along with the Richard Hart Cause, all making up the bulk of the rest of it, along with the Opus printer that's still doing 16k, and PGC Grays and Peacock offering a little bit in there as well. So those are kind of where most of the volume is, and that's the play. That's the play. Let's have a look at see what the overall results are. We've got Payment making a bit of a recovery today. Up 35% on the 24 hours, down 11% over the last hour, though, but a profit taking there. And of course, that would have been under a lot of pressure, didn't it? It is one of the PDI projects, also adding to why PDI has a lot of volume. And we got all the way down to 2.5 cents, back up at almost 3.8 cents. It did go over 4 cents today. So big jump back there. Bit of more work to do, but that's ticking away on the old PDI mints. UFO is getting migrated. I'm not sure if it's happened yet. Maybe we might go check up on Period Banana today, but that's coming up as well as the migration 12, 13%. If you're not familiar, the some sort of AI bot got around their taxes, and so they've had to relaunch the project. And of course, that supports PDC degrays, right? PCD die peer up there, 4.6%. Not much volume on that one, so it's sort of a bit of a tricky one. Number 5 is Bonnie. It's been around for over a year. That's up 3.3%. Source on mini meal, the food giant there in Europe, is up 3% at 5.4 cents. It's still migrating to Solana, so it's decided to have a rally the last couple of weeks on the old chain. Maybe in the lead up to that, I don't know. The last video I looked at was a month ago, and of course it's speaking the Deutschlander, and so yeah, it's a good thing. Just take the video, give it to download or something, and give it to AI to go read and interpret. That's kind of the play there. All right, so we got some of the stuff happening there. We got Tropa from Jason Marie up 2.5% there. A little volume on that one. PDC degrays appear near BFF in there as well. I think OG WebChef too. Tropa and Gizmo at number 13, up slightly. PMX 500 up slightly. Top Hat up very slightly, but that was up yesterday too, wasn't it? And Liquid Lines up slightly there as well, although we call it a Liquid Lines now. 29K of liquidity in that pool. Say what? $52 million. Where's the rest? Where's the rest, guys? Where's the rest? All right, so that's where we are there. Most everything else is slightly in the red. Not a lot in the red, just slightly in the red. You're talking about 1, 2, 3%. The only one that's really down today is Halgo, down 12%. Amiga down 6% there. Yeah, that's pretty much it. X is down about 3.7% in X Game, which is from Firewall relaunched those games, or at least some games, and that is taken away as well. So not a great day. Another day like yesterday, pretty much. Slightly better, isn't it? I think it's slightly better than yesterday. Let's go to the news. We're up to 56 minutes on the hour. Let's get into the Pulsechain news now. One of the things that is kind of cool is Liberty Swap there has got their dashboard. It's coming. It's a work in progress, but looks like they're almost there for Liberty Pools, our second biggest DEX. After removing all the spam coins with $1 trillion market caps, don't you love those, and $1 liquidity from our front end, this data shows the core asset value locked, trading volume, and fees in Liberty V3. 24-hour fee volume is sitting at 0.29%, so that's kind of the average fee. So you can just take their volume, times it by that, and you get an idea of the total fees. And of course, they take 20%, and they're using it to buy and burn Peacock, which is very strong and beneficial for liquidity providers. Looking quite good. We'll continue monitoring for a few days before rolling out the new UIs updates. Of course, we don't see that on Liberty Pools yet. Liberty Pools just has the pools themselves, but we're about to get a dashboard, which would be pretty cool. Let's have a look at the snapshot. They've got all time on here. So TVL, total value locks, that's all the liquidity in the pools, 725K. They are wanting to head towards 5 million as their first main target. So 5 million now. I think it was by the end of the year. I think if I remember rightly, we'll double check that, but I think that's the case. Volume, they've had $7 million since they launched. They've been around for about a month, I think. I can't remember when Patias came in, but it's about a month, something like that. And so this is our latest DEX V3. Total fees earned almost $21,000, guys. And of that, 20% goes to Peacock Treasury, buy and burn, and that's $4,200. And that's already been burned off. They're very close to burning off $1 million. Now, if I remember Peacock rightly, it had about 15.4% burned at the beginning when Peacock was launched. I'm not sure whether it was it Humpty, the founder, I think it was, and I think possibly it was Humpty that burned it. I'd have to go double check, but let me know if that's if I'm wrong about that. But I think that is right. 15.4%. That's sitting at the top wallet. It went to the 369 address and burned. But since that time, of course, Liberty Swap been burning away using the pump tires burning feature, which takes it off the total supply. And so now we have a less than $1 billion on there now, which is kind of cool. Much better way of burning, in my view, is burning using the pump tires and taking off the supply total than sending it to a 369 address, because it just sits in a big wallet at the top. It's kind of not as cool. And so yeah, we've got 4,200 that's gone on to burn, and I think they're at 950,000 tokens has been burned in the last couple of weeks. I say a month, but I think it's even shorter than that, right? They've been wrapping that buy and burn up, and so yeah, I think we're sitting almost 1 million. Probably hit 1 million today, is my guess. They'll probably hit 1 million burn today, so that's kind of cool. We'll check up on that tomorrow. They've had 306,000 transactions, and the average fee is 0.29%. As you guys know, with the V3, you can set up a 1% pool, but of course, on average, it's sitting at 0.29 across all the pools. So that's kind of cool. We'll be watching that. Obviously, the more volume, as I said to you, if we can go from 2.5 million volume and we can start getting up to 10 million, let's say 4x, then you're going to 4x these fees, right? You're going to go to 4x 20,000. Imagine the amount of peacock you'll be burning then, right? The peacock you've been burning off there. All right. So and of course you add all the other protocols. The Liberty Swap bridge. Liberty Swap DEX aggregator when it gets back. You get add on these the hyper markets. Next month is the spot and perpetuals, which should be a real revenue kingpin earner, and then the lending coming, Liberty lending coming. These are all the major revenues that you can make in crypto, right? Are these categories? In fact, I'll just rattle off a few so you can see what I mean. We're going to paste this. Let me just check this out. We're going to pull this up. This message here is a really good chart to show you with Liberty Swap is kind of a kingpin running a lot of the stuff already, right? So if you think about where do we want developers making stuff, obviously we want them in some of the latest, the hottest stuff that's on the markets that's doing really well. But we also want them to be, trying to do dApps that are actually making revenue, right? And giving reasons for people to use the chain and use the dApps and stuff like that. So these are kind of some broad categories. But you can see obviously a lot of revenue on layer one, right? Well, we've also got Pulsechain, so that's already ticking away. Dexes, well, what have we had? We've had 2 new Dexes leaked recently. We had the V4 from Brandon with Switch XFine, and we've had Liberty Pools, right? So obviously, we had Dex and Dex aggregators. They're kind of running. We've got like 4 blue chips and many other smaller ones, and they're ticking away and they earn a lot of revenue, right? So obviously, the more volume, the better. Now, obviously, for Dexes to earn more, you need more incentives and you need more dApps, right? So that's kind of the play. Moving forward, and you need a lot more promotional activities like referrals and things like that. So that sort of stuff can be dynamically increased. Derivatives, well, we've got that coming, right? So at the moment, we've got obviously a couple of niche players on the chain that sort of give you a few derivative players. We've got a GMX fork on the chain, but that's kind of died off being used. But we've got Liberty Swap coming up next month using Hyperliquid. They're going to be offering spot and perpetuals, so we're going to have sort of derivatives like that. We obviously have a range of staking derivatives for Hex and other things like that, but actually we're looking for more perpetuals and lending sort of products like that, sort of a crossover between derivatives and lending, and that's all coming to the market. We've got a big one coming next month with spot and perpetuals. I hope they also have referrals and trading targets. That'd be really cool. I'm not sure whether they're going to go that far, but that'd be really neat because I think that does add to bring in more user types like traders, etc. So that's kind of cool. Obviously, Liberty Len's coming, so they're also going to be coming in with that, right? So Liberty Len, it's going to be a big deal. So we want to see a lot of that stuff coming too, and really ramp up. So as you can see, 26 versus 2025, H2 versus H1, things are down, but obviously values and prices are down. But the idea is that you just want to be in these categories and you're going to earn a lot. So you can see that Liberty Swap's moving in, obviously done the DEX already, but moving in the DEX pools, but also moving into derivatives and lending. That's where Liberty Swap's going. That's where all the fees are made. Liquid staking, that's coming too. They've already hinted at that, right? Particularly around meme coins. So they're coming into that. You can kind of see Liberty Swap is entering all these pretty much left to right here in infrastructure. They're already a big player in infrastructure, right? So infrastructure, they've already got the Liberty Swap bridge and stuff like that. They're already supporting that. Privacy with the railgun, all the sort of stuff that I would consider that sort of infrastructure here. And then, of course, RWAs, they're coming with that next month, right? With the spot and perpetuals. And I just don't, the layer twos, the NFTs, not so important. Although they could do an NFT one, I have suggested them a different one for that. But that's further down the track. Now within this, of course, they've got many other products they can launch, and they've said they've got lots of products to launch. But this is kind of what we want the market to do, is to think about all these, developers to think about all these ways of getting people and products in the space that are actually earning revenue. As opposed to just reflections and printer tokens, which are all fine. It's good to have those in DeFi, but we actually need to get all the hot to trots, so to speak. And of course, we had a hypermarket, launch with the outcome prediction markets too in there as well. So, all right. So this doesn't cover everything, but some of the main categories where people are making most of the money. All right. So kind of cool. We'll be watching out for that. It is very neat. Now, I think we had one more update here for Liberty Swap that I wanted to talk about. They're obviously covering a lot of different topics, but I just want to get to let me see here. Now, their Liberty Swap wallet is going to be doing integrated solutions, right? So we're excited about they're going to integrate all the best stuff, and you basically going to have one environment where you will be able to do everything, right? Our users will be able to bridge and swap all sorts of assets directly inside the ZKX wallet without worrying about wallet hacks, drainers, sandwich attacks, or fake websites. Powered by Batias, PulseX, Liberty Dex, CowSwap, Circle CCTP, and Chainlink CCTP, right? So very bullish there. It's all coming, guys. So next month we're expecting, mobile wallet. So we're expecting that. So after releasing ZKX wallet mobile, we will bring the site back. So they obviously bring GoPulse back, and they're going to have a lot of utilities coming out with that as well. GoPulse was one of our top information sites, let alone having the controversial swapping that they had. So now we're going to have better technology with Liberty Swap coming in there with fair value, right? Fair value. So kind of cool. So that is some of the big stuff there. Now I'm going to do a quick. I was going to check something before, wasn't I? What was I going to be doing there? Let me just check Fast Abdul just to see if he's done any update on Vault 369 coming. I don't see anything off the top there. So we'll quickly go to Brandon, see what anything we got anything update on Switch. So these are all the biggest blue chips rolling out on the chain. And obviously we talk about a lot of other projects outside of that category. Let's see here. Let's see anything in particular there either at the moment. So that is some of the key stuff there. Obviously, we're excited about Liberty Swap. Now, other project teams that are out there, like Stu, is working on a lot of his Web3 technologies with licensing and staking coming up for Tetra. And then Signum Oracle in July. We'll have our second public Oracle operating there in July if they keep to the timeline. So that's exciting as well. And that should open up, PSDRGO in the future once maybe ETH starts rolling a bit. So that's kind of the some of the timelines there with the projects. What else have we not talked about? I don't know. We think we've covered everything on the planet. We covered everything on the planet there. So yeah, exciting times ahead, guys. We just got to just bide our time while the market finds the bottom and buy the bottom and make sure you got the best stuff in your portfolio and just be patient because the big play led by Tom Lee in particular is going to be quite awesome to the upside. Even he gets a lot of flack now, but he's actually the chess master there, and he's making sure that the institutions come over, and he's going to bring mass adoption too. That is exciting times. It's the first real time I think we've had that chance, and that's through Mr. Beast. And you can't do much bigger than that. The largest social media influencer of all time, and 1 in 3 people on the internet watches videos every month. So can't do much better than that, right? It's going to be exciting. We're also keeping a lookout, for X Money from Elon Musk. That's going to be quite an integrated solution as well. First with fiat and then crypto. And I think that's a little delayed so far from what I've seen. We haven't seen much news about that, but that's going to be another way of mass adoption using the X platform. Obviously, one of the top platforms in social media on the planet. So that's another way to mass adoption as well. And the way they're going to do it is make it real easy, just like Liberty Swap's trying to make it easy for people to use all these advanced products like Railgun. Then we're going to get that sort of ease of use as well, so that mass adoption is easy, right? People don't have to think about a lot of the stuff that we do. Like we're in DeFi, we learn all the tricks and everything else. People don't have a clue. You guys know it. You ask people non-crypto, they don't have a clue about nothing. And so you got to make it super easy, just like they're at a bank or something. That's as far as they can understand. I got a deposit. Thanks very much. Okay, I'll work it. I understand it. So I'm going to have some Ethereum. Okay, whatever that is. It's cool. I'll have some. It's kind of that simple. All right, so kind of cool. So yeah, Railgun at the moment is coming up. We're going to have full Railgun contracts coming to Pulsechain, care of Liberty Swap. We're going to have a mobile wallet. It's going to be the wallet of everything, and that means they're going to be hooking in lots of all the best DeFi that earns revenue. It's going to be awesome. All those fees are going to go back into Peacock as their store value coin. Could be our first meme coin back utility that actually goes to the moon and actually maybe gets on the map globally. There's only I don't even know how many there are right now, but maybe 5 meme coins that are highly ranked. And of course, utility meme coins are superior because they've got businesses buying them. So we're watching that. Now, obviously, we've also got the spot and perpetuals coming up, backed by Hyperliquid, coming up next month. Very exciting. And they're going to integrate all that, and then Liberty Land and many other products. Now, I've got a whole list of products that Liberty Swap are doing, but you have to join Strategy Club to find out. I just did a big report on that 2 days ago. So if you are in our strategy club, you will get access to all that. And it's very exciting. And I don't even talk about them on live stream. That's how disciplined I am about that. So there we go. So get into it, folks. It's going to be a lot of fun. We got obviously Fast Abdul coming up with the multi-chain liquidity fork. That's going to be very bullish. And then, of course, we've got lots of cool things. And it was really, really good that Brandon launched Swix XFi and Switch to our DEX and DEX aggregator. Both of them, DEX, of course, V4 technology, both of them offering managed concentrated liquidity management, which is fantastic. That really takes out all the cleverness. You don't have to think about too much, does it? And we're watching that. It's a long game project, right? So a long game project. And, it was really cool for him to launch that. And we look forward to much more. Funny enough, his development team also did the audit for, that's Bull Detect, did the audit for Fast Abdul's multi-collateral, multi-chain fork of liquidity. And that's not too far away as well. So onwards and upwards. Yeah, very exciting. Now, I do need to cover Stu's Web3 stuff a lot more coming up. So we'll look to do that as well. Other than that, we've got a lot of what I call mid-range teams doing some incredible things on Pulsechain. We've got Emmett Farms with Kairos. Kairos is doing some really great stuff on farming, offering EDI rewards. I mean, over $150,000 already in 15 months. Pretty amazing. True Farm, the True DeFi guys, offering managed funds approach, including DeFi projects like True Farm, offering high yields as well. So they've been doing very well. So they've been doing some good stuff. We've got some good innovators out there, particularly thinking of some of the ones like Nexion, innovating a lot in the DeFi ecosystem space. So they're doing some great work out there, but there's many other great teams as well. Really putting their name on there, like RhinoFi and Nuclear Supply, giving us some really niche, innovative tokenomics. So there's quite a bit of stuff happening, and maybe we should just do a whole show coming through all the project teams. So maybe we should do that. Let's do that sometime soon. And we might use Frank White's little PLS start environment. So if you guys want to learn more about the projects, let me leave this with you for a moment. And this is the Pulsechain ecosystem map from Frank White. He's in the chat today. And you can see a lot of the projects that are operating on Pulsechain to various degrees, of course. But look at them all. And there we go, folks. Very, very exciting on the old chain there. And of course, there'll probably be many that are not on this chain, but maybe they're not, they're active at the moment. So very cool. Maybe we might go through that and talk about that. So anyway, that is the ecosystem map. I'll just post that in the chat there. So to finish it off, we've got many more projects that will be coming on that list. So that's cool. That is the list there, and that's from Frank White, actually. There's Frank White in the chat there. Big shout out to him. So you can go through that. But we actually might go through that too, do a whole show on that coming up. Seems like a good idea since we've got a lot of cool projects, top tier projects launching on Pulsechain in the next 6 weeks. All right. If you are a team out there and you want to get on and cover your project, hit myself up or hit MVS up. MVS is the promotional lead for the Crypto Night Show, also the editor-in-chief of the Monster Thread, #1 newsletter covering Pulsechain every single week. I think we're coming up to 60 weeks this weekend. 60 weeks of the Monster Thread coming up this weekend. Isn't that crazy? And it's in a year 2 of production. It's a professional publication, but it really does highlight all the best stuff that people are doing and that all the best DeFi on Pulsechain as well, which is a lot of fun. All right, we're going to end up there. We're about an hour and 15 minutes in, which is kind of my targeted time for the show. Hope you guys enjoyed it again. Another day of Pulsechain, another day of crypto madness as we hunt the bottom in crypto and Pulsechain, and we move on to that next phase of glory and the magic money carpet ride. That's the play. All right, take care, everybody. Catch you again tomorrow. Bye for now.